Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. National Financial Literacy Month is celebrated in April, which is a great opportunity for us to check and promote our financial situation and skills. Joining me to discuss best practices for 401K rollovers, retirement, and the Great Resignation, we have Gaurav Sharma, CEO of Capitalize. Gaurav, it's great to have you with us. Welcome to Trade Talks.
Jill, thanks so much for having me.
What are the challenges with our current 401K system in the context of longer-term retirement planning?
Yeah, it's a really good question. I think there are a few challenges with the 401k system. So first, there's a lot of good things about 401ks, right? They are connected to our paychecks. The money comes out of our accounts in an invisible way. Americans have saved trillions of dollars inside of 401k. So a lot of good things, right? The fundamental problem, though, is that the 401k, is tied to our employer. Right. And so when we change jobs or we go to a new employer, we have to figure out, how do I interact with this brand new 401k at a new company? And what do I do with the old money that I've saved inside of my previous 401k? And it's very easy for people to make mistakes with both those things when it comes to setting up and using a new 401k, as well as what to do with their money that they've saved in previous 401k accounts. So those are two of the biggest challenges we have today.
What's the impact of the Great Resignation on the issues of 401ks left behind with old employers?
Yeah. So one of the things that is staggering is just how many people end up leaving their 401ks behind when they change jobs. So we actually did some research last year where we partnered with the Center for Retirement Research, and we estimated that there are 24 million forgotten 401ks in the US with $1.35 trillion of assets in them. So there's 3 to 4, in a normal labor market, we think there's 3 or 4 million accounts that get left behind each year. As you know, though, we are not in a normal labor market. We had 47 million Americans change jobs last year with the Great Resignation. And so one of the big challenges is, if people are already leaving accounts behind when they change jobs, that is happening more and more as we change jobs at an ever-increasing rate. So the Great Resignation worsens this problem in a lot of ways.
So just to clarify this, people are leaving behind they're not taking, what are they doing?
They forget about it. So they have a 401k at an employer, and I've been in this bucket, by the way, so there's no judgment here. But what happens is, when you change jobs, you have so much going on. Right? You might be moving cities, you're excited about your new gig, you're trying to figure out a whole bunch of things. It's very easy for your old 401k, your old employer, to fall to the bottom of the to-do list, right? And so in theory, what most people should do is that they should kind of roll it over. They should move it with them, right? And people do that. A lot of them, though, will end up saying, okay, you know what, I'll deal with that at some point down the line. And right now I'm focused on other things. And so they end up kind of forgetting about it. And it stays there. The money remains in their name, right? Like, it's not like it gets reclaimed by the employer, but they lose track of what fees they're paying and what their money is invested in.
That's a very good point. I'm thinking of the list in my head of all the things that I meant to do, especially as we think about tax time. So I guess we're all guilty of it. What's the regulatory environment like in this space?
Yeah, look, 401k plans are regulated in a number of ways. So the Department of Labor and the IRS both care very deeply about the way 401k plans are administered, right? Because there's tax breaks involved. Right, so there are tax breaks involved. In addition, it's something that an employer takes on a legal liability or responsibility to administer on behalf of their employees. So 401k plans are pretty heavily regulated, actually. An employer must make sure that they're picking low-fee investments, that they're telling their employees the right things about the plan, and so on and so forth. IRAs, so individual retirement accounts, are less regulated. So individual retirement accounts are different from 401ks, as you know, in that you can open them up on your own at many financial institutions. And so IRAs aren't subject necessarily to the same Department of Labor oversight, but the IRS again cares because they are tax efficient vehicles. So both accounts are somewhat regulated, 401ks much more so.
Let's talk about the response from fintech ecosystems and more specifically the solutions that Capitalize is providing.
Yeah, absolutely. So we started Capitalize in response to this broad problem, which is we are expected to save money for retirement over a 30 to 40 year period, but we keep having to do it in these 3 to 4 year installments as we go from job to job to job, right? I have to save for retirement in this 401k and in that 401k and in that 401k and that 401k. And one of the problems we perceived was exactly the one you and I were talking about, which is people tend to forget about their money and leave their accounts behind when they change jobs. And we were pretty surprised, honestly, at the magnitude of the problem, right? The 24 million accounts and the $1.35 trillion honestly surprised us at how big it was. And so we dug in and we said, okay, well, why is this happening? Why are folks leaving their accounts behind or withdrawing them and cashing them out when they change jobs? And it turns out that the real culprit, in our view, is what's known as the rollover process. So the rollover process is the way you move money from one 401k into another account, like an IRA. And you would expect in this day and age with technology that you could just click a button and go bang, bang, I'm moving it from here to here. Unfortunately, that's not the case. So the process that is involved in actually rolling over assets or moving the money is incredibly old school and cumbersome. It involves phone calls, paper checks, faxes, notarization, a whole bunch of manual steps that an individual needs to go through in order to actually go and reclaim those assets and move them. And so that's the problem that we're solving for. So we've built an online platform to help folks roll over.
It's the way of doing it now sounds like you're going for a mortgage. I mean, essentially, it's the same paper process. That's pretty crazy. Well, it's a good thing that we have evolving fintech companies such as yours to get us into the 21st century here.
That's our hope. That's our hope. Yep.
All right, Gaurav, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.